Good afternoon, traders. This is Christian from Tribeca Trade Group, and it is Friday, October 28th. This is your end of day, end of week market video. So how about that? What a day to finish the week. I bet a lot of people didn't see this coming, including myself last night, when you looked at what happened to Amazon after the close and how much the Qs were down after Amazon reported. And then, once Apple reported, which, their earnings I thought were okay. They were not bad. And they had some bright spots that came out in their earnings report. Also, there were some really good metrics that they had out of there. Their revenues are huge, right? Their revenues for the quarter are bigger than GDP, some countries' GDP for like a whole year. So I mean, the bottom line is Apple's a colossal company. You could, I guess you could argue or debate whether or not their iPhone sales or their services or some other metric is as strong as it is, but the one thing that I always come back to with Apple is looking at the overall size of the company. They're not going to grow 30% a clip every quarter because it's impossible, the size of the company, right? You have to think about scale. At this point, Apple's as big as some countries are. So, the fact that they're just, churning out, I think it was the quarter was, how many billions of dollars that they made. This, I don't have the number in front of me, but we were going over this earlier in the trading room. But it's just a sick number in terms of how much revenue this company just turns over quarter to quarter. So there were some questions about why Apple rallied so much. All right, and there's the screen print that I was just referring to regarding the revenues. Yeah, I mean, $90 billion. So I think that's part of it. Even though that like I said, some of the numbers, some of the metrics were not as high as people were looking for. I think when you kind of look at the total revenues, that's probably why people are investing in Apple. So a real nice move from Apple. That's part of the reason, of the move today. There's such a big chunk of the indices. We talked about earlier in this week how big these FANG names are, the so-called, FANG names or mega tech. So, we had several of these reports that came out that were not great. This one I think was good enough, and you could see moving back up to the 200-day moving average. I still think this chart looks very difficult. Look at the volume today, by the way, in Apple. So I wanted to cover that, even though I don't have any position in Apple. It's such a big weight, and it's a catalyst. So that really kind of took the market higher. But there was a number of other things, and we're going to go through those things in this video, and I'll also go over the market performance that we have. So this week, yes, for this weekend, to sum up a little bit of October. So a couple of things I wanted to highlight, which I just thought were very unusual. The Dow, right? We've talked about this a couple times over the last few weeks. I know that, of course, the Dow isn't the whole market either. It's only 30 names, and it is larger cap, but look at this go up to the 200-day moving average. No, of course, there's always something negative that we can kind of bring out here. We did take out a VPOC up here, and that's usually a place that once we get up to, you might see digestion, you might see a reversion back a little bit too. So just keep that in mind. But overall, I mean, it's really difficult to say that that this is horrible in terms of the move that the Dow stocks have had from the lows. I mean, it's a pretty good thing, I think. And then, of course, if you look at some other areas of the market too, if you take, this is a chart that I posted earlier, right? The big thing all week long that I heard, which was, a lot of technical analysts say, and a lot of charts that people were saying was, wow, the S&P got rejected at the 50-day moving average. And I think, and this is what I try to do for traders and investors, is to really, do a further examination of that. Were we seeing that the market was just really, weak and, rallied right up to the 50-day moving average, and that's all that we were going to get? Under the hood, were things looking really weak, or were there some stronger points that we could find out of the stocks that maintain and are inside the S&P 500? And I thought once you did an investigation, there was a lot more bright spots than there were negative. So one of the things that you could always do, especially because it was very unusual to see the big cap tech do so poorly, and some of the other stocks do so well. So take, for example, if you look at the RSP, right? So this was a chart that I posted earlier today. It is the S&P 500, but instead of market cap weighted that SPY has, it's equally weighted, meaning every company gets the same weight. Now, the examination is that this already got over the 50-day moving average. I know it doesn't get that much attention because it's not as heavily traded as SPY or S&P futures, but you have to kind of hand it to the overall components of the index, which have been stronger and had no problem getting over the 50-day moving average. Also, IWM, which we've talked about quite a bit, that got over, it's, got a lot less attention, was how strong the semiconductors have been, basically getting over the 50-day moving average and no problem. So does this mean like victory for, for stock investors? No, it doesn't. I mean, I'm just trying to prove the point that there's been a lot of really strong pockets, and I'll go through a couple of those areas. Now that we're through a very big week of earnings, there's some alarming things that we've seen, some really strong areas of the market. So again, it doesn't mean that we're out of the woods. We've got a Fed meeting next week, right? We had no Fed speeches this week, which have been, all over trying to kind of keep this market down. So they may do that next week. It may be more hawkish next week. We did also, another catalyst for the day was, and I didn't view this as all that positive, but we did get a lot of data that came out today, inflation data. And, if you remember from the CPI report and the PPI report that we got earlier a couple of weeks back, it was still showing a rising of inflation. Well, this number finally came in on the screws. So that's maybe a baby step, in terms of not necessarily inflation coming down, but at least it's not going up as fast as what we've seen from the last reports. For example, the deflator came in 0.3 versus 0.3. Employment cost index came in 1.2 versus 1.2. So at least, and the year over year number 6.2 versus 6.3, at least this is maybe slowing down. And I think that's probably the most realistic thing. So the Fed meeting that we have next week, right? And I think, you have to stay on the edge of your seat as a trader, but overall, just taking a snapshot at what we're seeing for this week and what some of the strength is post earnings, I would have to say that you have to be kind of pleased outside of those mega tech reports. All right, let's take a look at some of those names. Now, I talked about earlier, and I sent this out on Twitter, about where some of the pockets of strength are in this market. And I have this somewhere in here. And we could go through a little bit of these. So first of all, what I thought has been really strong for now weeks is what healthcare has been doing. I mean, look at Gilead. Right. So again, there's some really nice strength in this market, and you could go across and you could look at some other names in the group, but overall, we've been seeing this strength in healthcare. Again, it's not necessarily the whole group, but J&J has been another name. If I can get J&J to come up, which it's not, Thinkorswim doesn't want to give me that chart, so we'll move on to the next one. But even a Bristol Myers, a Merck has been out to the fifth. Been out to new highs, right? So you look at some of these charts and you're thinking, wow, bull market maybe, but healthcare is a more defensive area of the market. If you want to look at the overall ETF, it looks very close to the IBB, which again looks at more mega cap. XBI, again, I'm going to go through some of these charts pretty quickly. Did get over the 200-day moving average, bullish engulfing. I think that's a positive development for now. We'll see if this wants to kind of continue and get out of this range. But so far, I think, you know, it could be on to a bigger move. And I think that's pretty interesting. So healthcare has definitely been, you know, an area of strength in the market. Then if you kind of put together some things like, you know, the insurance names, look at what Chubb has been doing, right? And there's a handful of these names. And I like the asset managers. LPLA, which you've heard me talk about now for weeks. This had earnings, really nice candle out to new highs. Another one too that reported the other day. I mean, look at the moves on some of these names. So to me, when you see moves like this, as long as it's, you know, again, it has to be a good quarter, which some of these names did have, but it just shows that there's a lot of bottled up you know, cash on the sidelines that's waiting to kind of go into some of these stronger names. Again, stronger names is the key, but look at this chart. I mean, that's really nice looking. Schwab, which I've been talking about too, you know, this actually broke above the value area. So really, you know, a little bit of a delayed action, but the reason why I'm focused on this group is because I listened to when Bank of America it was actually before they reported earnings, but one of their analysts or someone high up in the company said that there's a bull market right now in financial advice. I believe that. I think that people now are going to want to sit down with their financial advisor, maybe put some money into bonds, maybe put some money into other places, right? Not just tech stocks. So when you look at some of these companies, right? Another one too was Stifel, right, which had good earnings too. So this is another pocket of strength. And now this one is not as strong as some of the other ones that I mentioned, but very strong looking. And then of course, I like this chart a lot too, which is Berkshire, which of course has a big stake in Apple, which everybody knows that. But it also has a big chunk of a insurance company, which I just mentioned. Insurance companies are doing very well. That company is called Geico, small company that you may have heard. But I think that this is a great play on this particular group right now. Next group that I mentioned, which is showing some strength, we talked about the money managers, the brokers, the healthcare, the auto supply companies. I mean, just unbelievable. Look at GPC. I mean, you're kidding me, right? Look at this stock break out again. Remember, this was $136 stock a couple quarters ago. Now 178. Really, really strong. And then if you look at some of the other names within the group, AutoZone, Orly, even in Allison Transmission, right? So maybe people aren't going to spend money because these charts don't look the same as EV companies. But maybe people just don't have the money to be spending that much, you know, that many dollars on a new EV, and those companies are much more highly valued as well, right? They're more expensive. So this, for now, is the market that we have. You know, and in tech, it's going to be select areas of tech, right? It's not going to be all of tech right now. In my opinion. Why? Because interest rates are just too high, right? We do have a different market. I mean, look at what, you know, even with interest rates going down this week, the 10-year is still at a very high level, right? So this is TNX. This is just the 10-year in treasuries. But if you want to look at this in terms of overall bond rates too, we can do that, right? And we know that right now, you know, and again, here's the path. Just to give you a little bit of a different, yeah. So still 4%, you know, this is just looking over 5 years, you know, looking over the last year. But remember, we were at nothing a year ago. So there is, you know, a movement to, you know, more value type companies, but it doesn't mean that, that's necessarily bad, considering the momentum in some of these areas of the market. So again, I will say this, as I always, from time to time, like I come across a trader who gets stuck on the FANG stocks and think that that's the only, you know, that's the only stocks that they can trade in this market. Or if you are a retail investor, and if you are not a hedge fund that has to invest in high growth stocks, then, the world is your oyster in terms of stock picking, right? You could go into any of these names. So that's the value that I try to add at Tribeca Trade Group, just to tell traders that, hey, you don't have to trade the Microsoft, the Google, right? There's so many other companies out there, and this is going to be a very different market, I think, going forward, considering right now where the relative strength is right now. Also, even like a bigger bank, right? JP Morgan, right? JP Morgan is still, even though they're getting a very good rate from banks, from the Fed, right? The Fed funds rate is around 4% right now, right? Well, they're not giving any interest to their customers, right? That's very bad in terms of a business decision, and in my opinion. But that means that they're going to be making more money, and the stock is probably going to do well, considering they're not paying out any money in deposit fees. So this is now over the 200-day moving average, which I think is a pretty interesting picture here. I mentioned that I would go over the performance for the week. Surprising when you look at your best performers for the week. First of all, S&P up another 4% for the week. That makes for this month, which we only have one more trading day. But if you look here in the right column, small caps were up 11% this month, right? We've talked about before, you heard me say that we needed to get out of September because it was the weakest seasonal month, where October lived up to what seasonality says in a midterm election, right? The S&P up 9%, right? A lot of people questioned me on this. They're like, no, it's not going to matter. This is a horrible market. 9% for October so far, right? So the seasonality did have something to do with it. Mid caps also up 10.5%. Very interesting. And same thing when you look at the week's performance. Notice what Qs did, right? Underperformed, still up 2.1%, which was this today saved the Qs, but underperforming everything else, right? This should actually be in red, as emerging markets were down for the week, and the dollar was down for the week. Bonds were up 3.9%, which also helped a lot. Again, some people got a little bit confused, I think, looking at the day-to-day relationship. Well, what are bonds doing today with equities? Well, what did they do for the week? They're up 4% for the week. So that helped. That took the pressure off of the equity. So very important. Also, one thing before we get into the well, we could talk about some of the sector performers here, but yeah, I mean, home builders up 9% for the week. Perhaps that's a function of what interest rates did for the week. Retail, telecom, biotech, industrials, which is another pocket of strength too, which I didn't get into, but some of the industrials showing really nice strength. Caterpillar, which I couldn't believe this week, had a big move. Also, other names. McDonald's. I mean, look at McDonald's go from 240 to 275 out to new all-time highs for McDonald's. Again, not exactly a huge growth stock, but if I covered up the symbol, you'd have to say that that's a pretty good looking chart and a move out of consolidation. Huge green bar for that one. Wingstop was another one too that had good earnings for the week, right? Really impressive, some of these names, right? In a very difficult environment. So you have to say that that's pretty impressive. One other thing, which I'll probably leave with for today, but one of the things that we've been, knocking on our desk about, right? Pounding the desk on, I should say, is the right phrase, is, hey, this was a change, the McClellan Summation Index. The way that we want to use these tools is so that you could basically be unemotional about a trading signal, right? This is telling you that there is a change in tone. We have more advancing names versus declining, right? This triggered about a week ago, and it is what it is, right? A lot of people like to question these things, and they like to go against the tape, and they like to think that they have a better feel. But I'll tell you, if you could take some of the emotion and out of some of the personal bias out of the equation and use something like this, I did the same thing back here, right? When we had the last crossover, I had everybody trying to short the move the whole way. Not everybody, but we had some traders in the room who were trying to fight this move the whole way. Like, just go with the momentum. And once it changes, then you could change. But for now, I think like this is a very good proxy. And again, you have to kind of understand that once this changes, right, you're not going to catch the top, right? The goal is not to catch the bottom and not to catch the top. It's to catch the swing, like to catch this swing or this swing to the downside, this swing to the upside, right? Not to get the absolute low and so on and so forth. Guys, so that's it. Very, very interesting week. You know, this wasn't the easiest tape to trade the last couple of weeks. We've seen some moves happen a lot in the overnight market, but there's been a lot of trading opportunities. And I look forward, once we get through this last day of October, I look forward to trading with you guys more. If you are not a member of Tribeca Trade Group, where do you go? TribecaTradeGroup.com. You could sign up to be a member. I would suggest try it out for a month. If you don't like it, let me know. But I think that you will like it in terms of, you know, some of the areas that we bring to traders' attention. I think we're always in front of the curve in terms of where we're spotting the relative strength and the momentum in this market, even when it's been a more difficult trading environment. All right, guys, that's it. Have a great weekend, and I will see you guys back on Monday.